What could be next for silver? Hi everyone and welcome to Ainslie Insights, brought to you by Ainslie Bullion, Ainslie Crypto and the Gold and Silver Standard. Today, welcome back Alex, who is always looking at what's going on with silver. So she's the absolute best person to talk to about this. How are you going today, Alex?
I'm going well. How are you?
I'm very good. Now, you've put together a really interesting article that we've been looking at about really just silver generally and what's been happening so far this year. Huge gains so far this year, really. But you're potentially saying that that's just the beginning of something more. But start us off, what's been happening with silver? How are you looking at it in terms of the primary factors that have really contributed to that rapid rise in its price?
Yeah, so 2024, silver went up a lot in US dollars, but because the Aussie was pretty woeful, it went up even more in Aussie dollars. So I think it was 34% just in Aussie dollars last year. So it was a huge climb, and this year we're looking at around 11% already. So that's what's going on. It keeps rising. It's been one of those assets that hasn't been in a bubble, whereas every other hard asset like property and shares have been in a bubble. Silver and gold have not followed. Arguably, they've just done a bit of catch up because at this point, it still doesn't look like a bull market.
And that's really hard for people to get their head around when you say that. It doesn't really look like a bull market, yet we're sitting at all-time highs. What do you mean by that?
Actually not sitting on all-time highs. In regard to Aussie dollars, back in 2011, we actually hit $2,000 a kilo. It was very brief. So, just do inflation, look at housing since 2011, we're still pretty far behind where we were. In terms of US dollars, we're definitely up there. So, and then look at Hunt Brothers, didn't it make $50 an ounce back then? So we've still got some peaks that we still have not climbed still in 2025. But why it is not a bull market right now is because in every precious metal bull market, and we've used an example today of the last 3 in the last 20 years, the GSR, the gold-silver ratio drops. It has not been. So last year it actually climbed. And this year it started to come back off again. So we've gone from about 91 gold ounces to silver to 88 now. So it's starting to come off. So it'll be interesting to see if this is perhaps the start of the bull market, but we are not there yet.
And that is such an important distinction that you made, that it matters, first of all, that you're looking across a long enough time period when you're talking about these highs, but also the denominator. It really matters what you're measuring this in. And when you measure gold against a whole raft of other things, it's nowhere near the all-time highs. So really good point that you're making. I want to dig in a little bit more about that gold-silver ratio because I've become really obsessed with it. This idea that the fact that it's so high, it seems to me like almost a once-in-a-lifetime trade, right? Where you've got the GSR sitting there, where it's been above 90, as you just said.
Yep.
And we know that it always has come back down. So for it not to do that means this time's different. You probably don't think that's the case.
So let's just quote some gold-silver ratios that everyone gets excited about. So 30 is this one where everyone talks about because that's what dug out of the ground, around 30 ounces of silver per ounce of gold in the ground. So I guess traditional silver bulls always use the 30-1. But if you look at bull markets over the years, it sits between 30 and 70. So back in 2009 GFC, we were around 45. 2011, which, it got down to near 30 then. And really, that was the debt ceiling. That was when debt became an issue, which looks like is what is going on at the moment. Well, that actually came down to nearly 30-1. That's that time when Aussie silver was $2,000 a kilo. And then back in COVID, we were at about 60-1. So if you were to just extrapolate out what silver would be on those ratios, right, 30-1, we'd be at $5,000 a kilo. We're at $1,650, $1,700. We are well off where this could go and where it has been. So, the interesting thing is when this hits and when that ratio starts to drop, what will it do?
I love that. I love that answer because really, we can see into the future here a little bit. It's one of those situations where it's so almost methodical, the nature of how this operates through the cycles, that it just follows through a natural progression, that you see gold taking off, silver lagging behind, but then when silver moves, it moves.
And so that was the point of the article today, is this is our 4th year of silver deficit, and the market and investors are not in the market. So if investors do jump into this market, that's when it moves, because you've got a supply-demand shortage of around 20%. So industry is obviously using lots. The circuit boards and EVs, all that stuff is really AI. They're starting to use a lot of silver. We're in a deficit. Investors are not in the market. We're at $33 an ounce, which is very high. You know, a lot of commentators are sort of saying 39, 40 this year, but that's on the fundamentals when we don't start seeing the GSR dropping. If investors do jump in, potentially that goes even higher.
And can you talk to us a little bit more about these deficits? Because we sort of throw that around a lot here. We keep saying we're in a deficit. But the thing with silver is, that I think a lot of people don't understand, is there's not a lot of primary silver mines around that are just digging this stuff up. It's generally a byproduct of the production of gold and other metals when they're digging other things out. So it's not like you can just turn on a new source of supply easily, is it, with silver?
No, and it's not gold. Generally, it's more sort of your zinc mines, your lead mines. It is industrial metals. So, you know, if we were to hit a recession, what will actually happen is mines will stop producing zinc and lead, and the byproduct, which is silver, stops being produced as well. So you actually get bigger deficits in it as as investor interest picks up during recessions, because production potentially drops. And it not being a metal that is primarily mined means it is dependent on what is going on with the other metals like zinc and lead.
And that's an excellent point, because I don't think a lot of people are discussing that, the implications of a slowdown in the economy generally, in the global economy generally, and we've got a lot of turbulence there at the moment, the flow-on impact when you aren't digging it out of the ground. So that could certainly exacerbate those existing silver shortages.
And not just that, you're not mining silver, you're mining lead. If the price of lead goes down and it's not economical, they don't look to silver as much. So it's just, shut down, and hopefully silver comes from somewhere.
So if you're new to this, because this is a question we get all the time when people are coming in new who might have stumbled across this video, for example, and they're listening going, okay, well, that's something I'm probably interested in. But then they look at the chart and they look at the price and go, it is expensive. Basically, am I too late? That's the question we get all the time. You're laying out a bit of a framework there that we're potentially not too late. How would you address that if someone asked you that question?
Every property investor always questions whether they're too late. Markets go up and down, and this does not look like it's in a bull market. It does not look like we're at the peak, whereas other assets right now look like they are. Silver, in particular, even compared to gold, has a lot of catching up to do just to get inflation in line with other assets. So stock market, property, going back to 2011, we would be at $5,000 a kilo. Property prices in Australia since then have probably doubled or 1.5 times what they are. So really that $5,000 a kilo, whereas I don't think it's going there. I'm just saying that's an inflation adjustment for it. So right now, we're not in a bull market.
And that should be the advice people need there, is to look at it through that lens of going, well, compare it to where it would otherwise be, have a look at changing the denominator a little bit there, and you'll soon start to see that, we're not even close to those all-time highs. Yeah,
and have a look at what silver does when it runs, because it does more than a property market and sometimes more than a stock market. So, when it runs, and all indicators, not all indicators, but the GSR certainly right now is not saying that this is how to run.
Absolutely agree with that one. And as I said, I'm very obsessed with that at the moment. So I'll fully back you on that one. The GSR just, to me, looks as much of a no-brainer as you can get if you were going to hold a precious metal, that it would be silver over gold at this particular juncture. Yeah. Well, look, I'm sure a lot of people really appreciate your insight on that today, Alex, because it's something that we talk about a lot. Obviously, we're dealing in this space, but really to dig into some of that background on silver, particularly to understand, the new bit for me was the mines. Like, it is really important to understand that if we're slowing down as an economy, it's not looking like there'll be a whole lot more supply all of a sudden come onto the market. So really important to understand that, I think.
Absolutely. So it'll be interesting to see what happens.
Thank you, as always. Thank you, everyone, for watching. We'll chat again soon.